Hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great day, great Sunday, wherever you may be, whatever you may be doing. 16th of October, 2016. No trade calls, no recommendations. Everybody's sponsored for their own stuff. So again, before we start, everybody, thank you so much for liking and sharing the content, and all the comments is always great. It shouldn't, but it does affect my motivation to do longer sessions and post more of these. So again, it's not going to stop me if you don't, but thank you very much. So what's going on? We're heading into a particularly interesting week, right? We got a couple of things. We got a lot of stuff on the data calendar, right? So we have a bunch of mid-importance data on Monday with Draghi speaking. We got RBA governor speaking. We've got monetary policy meetings out of the RBA, so out of Australia. We got CPIs across the board. We've got GDP out of China. We got industrial production out of China. We've got all that claimage count out of the UK. We've got a BOC, so Bank of Canada statement, press conference. We've got beige book. We got crude oil inventories. We've got the Australian unemployment. We got the retail sales out of the UK. We got Super Mario on deck. We got Philly Fed. We got the weekly jobs numbers. We've got Canada data. So, very, very busy week. And again, most importantly, don't forget that on Wednesday 19th, right, we've got the third presidential debate. So that should be particularly interesting, right? So we'll have to see what happens. Keep in mind, by the time London opens, we could definitely have a lot of wheeling and dealing. It's going to be, it doesn't mean it has to happen. As always, we know market can do three things. Market can go down, market can go up, market can go sideways. But, it'll always be interesting because it could, Trump might go out all guns blazing. And of course, it is also the anniversary of the 87 crash. So again, let's see what happens. So what is interesting us? Well, not to be boring, but the thing that's interesting us the most are the bonds, right? So we've been talking about these bonds for an awful lot of time. So I just want to talk about this briefly because you can go back on all the previous videos. But again, it's the same thing. The move is extremely orderly here in the way we're moving back down. So here the target would be into these 160-150s, right? And here the way this is trading, because you see this last leg down has been very aggressive without, they couldn't catch a bid. So right here, what you would expect is as long as any kind of rally is weak, right? As long as we can hold below this breakdown zone, the move to be very aggressive. And, we could see 158s, 160s an extension. Now, don't be surprised if they bounce. Markets can go up, down, or sideways. It would be healthy to see a little bounce, but it's starting to look a little bit ugly. So we'll have to see. And especially if the bounces are shallow back into this 0 point and they keep on getting sold, we could see this move accelerating back down into that final extension target, 158, 156s. I know it sounds like a long way to go, especially as we're moving off these highs, but the move's in play, right? So that's what the charts are saying. Let's see what happens. So that's really the most interesting thing for us. Then the other interesting things is equities, right? We've been talking about the way, for us, it looks like the equities are topping and they're looking heavier, and it would be interesting to see some kind of a healthy correction. Now, if you look across the board, it's a very similar pattern, right? So if you're looking at the Dow, right, we had these highs here. We take them out, we come back down, we rip higher, and we can't hold these highs, and back. We're down, moving back into that previous resistance area, getting sold again, right? So as long as these highs hold, there's no reason why, forget the bigger move, that's a much bigger move, but there's no reason why we can't see a nice little correction, right? Back down into the 17,500, right? That level, very, very nice. So this is looking particularly interesting, especially if these moves can get some legs, right? If you look at the NASDAQ, right, similar kind of action here, we take out these highs, we hover here. We said don't be confused by these low liquidity overnight ramps. They're not getting any traction here. Now we've sold off. Now as long as any rallies into these weak they get sold and they can't hold, you'd expect this to come right back down, right? Looking at 47.39s, but clearly there's a potential for us to come back into the 47s. But if this gets, if stuff starts to look a little bit hairy, don't be surprised for this lower area of support to attract, right? So again, I think these are very, very interesting. You see here how important it is if you step a little bit back, right? This is the pattern, right? This previous resistance is broken, was acting as support, is broken, and now on the bounce, market's trying to hold the Momo, right? If it can get real traction below these 47.39s, that's what we're looking for. Now, why are these 47.39s particularly important? We'll go back. Notice anything particularly interesting with this zone? Very interesting area, right? So if this whole zone could easily end up being a big fake out, and then by the dippers might not be sitting so pretty. So again, we're far from calling for crashes. We're far from calling for monster moves, but we think there are times when 5 to 10% corrections are healthy. We think there are times when too many people not considering or completely denying the possibility of something happen can catch a lot of people off guard, and then we could see something a little bit heavy. This is still support. This is a huge area, right? So we're not calling for this to crumble, but the pattern is starting to look a little bit heavy, right? And if you look at the ES, it's similar action. Even if you look at here on the 4 hour, right? You can see how pressure's still on off these highs actually, right? Drawing a lot of pretty lines today. Pressure's still off these highs. Market kept on trying to hold a bid here, came back down, tried to hold a bid here, and now it's falling in these previous levels here, getting offered again. So, if the market can't get back above this area, there's no reason why we can't correct a lot more, right? Very, very important points across the board, and as we've looked at this on the daily, it's behaving quite orderly, right? We had the move back down, pop back in that previous support resistance zone, the 50 DMA coming in here, market getting offered, trying to stall at the 100s, broken below the 100. This is a pivotal level, 21.33, getting sold at the 100, trying to make its way back into the 200 into the 1250, right? So fairly classical, and it wouldn't be anything big. Now, if it starts to sell off heavy below that, then it could get much more aggressive. And on panic, we'd be looking for these lower areas to come into play. But we've discussed that in detail in other videos that are on YouTube. So feel free to go and look at those. In terms of quickly looking at some of the other charts, gold, not an awful lot going on. 1250, big level below, day closes below, we'd be looking at 1200 to come into play. As long as we get whippy action below, but day closes above, we expect this to try and make its way back to the 1300. So big pivotal level, no big change. We've discussed this a lot in the past videos. What else we got here? USD Canada, right? Very, very choppy. A lot of people getting very aggressive to the downside, very aggressive to the upside. We think it's very, very choppy, right? Just chopping around here, but it does look like, especially if crude wants to cooperate a little bit, it does look like it's still trying to make that series of higher lows, and we'll stick with our original call that we've been pretty much on since this whole basing pattern here for 135s to come into play before we break down back below the 125s. Okay, so what else have we got? Australian dollar. A good example of don't stay stubborn. We were looking for all these failures into these highs to correct back into this 100, back into this 100, 200 zone, right? When we came back down, we discussed this in detail in the weekly too. You got to take your profits here. You can't be stubborn, right? The last pips can be the most expensive. Now, if you like it, you sell it again, especially into the RBA. There'll be a lot of wheeling and dealing this week, but you don't chicken out of getting short at highs when you want to get short and start shorting into support, right? This is behaving very orderly. It's still inside this area, and we'll have to see who's going to win it out, right? With all the data, the RBA, you'd expect it to try and take a stab at highs. Any failures for us will be shorts for a move back down, unless USD catches a bit extremely early in the week. We go knife through butter, but that's what we would be looking at. What else we got? Crude. Still all about these yearly highs, right? Getting defended aggressively. As long as we don't get a daily close below, we would expect the healthy move to see some kind of a move back into the 47s. Again, this has an awful lot of headline risk, but the way we're looking at it is, interim bull bear line on daily close, those 5150s. This is a little pivotal level intraday. If we get Momo below, 147s come into play. If we keep on catching bid, it'll try and chop around in this area, but we expect, unless it's something aggressive in terms of headlines, it's going to have a hard time closing above those 5150s, and a healthier move would be to see some kind of a retracement back below that level 48.47s. That's what we would be looking at. That's what we've been discussing on crude. Kiwi, much heavier than Aussie, much nicer topping pattern here. The way it's bounced exactly where it should bounce, ahead of all these areas of support, right? Here, you can make an equally good case for the long side or the downside. Long side would be saying that this is basing ahead of this area. Moving averages are going to come up and we're going all the way back up. The bear case says this is still heavy. Even on the move down, if it's going to bounce, it's going to have to bounce from a lower level. So any rally is a short for a continuation of the move back into the 69s. And there we can decide if it's going to, which way to play. Longs back in play, aggressive shorts, depending on the action. But right here, the levels are still the same. They're not really changing, but the problem is here you've got a huge cluster of resistance and you've got a huge cluster of support. So unless you're managing an open trade where you've worked the trade a little bit, we feel it's not cheap enough to buy and not expensive enough to sell for an opening new trade right here, right now. We'll have to see going into the week. Yen, no change. Our call is still for this to try and rotate higher. We've been talking since all the past FOMCs and BOJs. We've been saying, weak equities, weak bonds, strong dollar, weak yen. So going into the week, we're looking for daily closes above 103.50s to continue to try and make its way higher. 105.50 is still the pivotal level. We'll have to see how this trades, but that's the level we're looking for. To the downside, it's a really tricky one because it's a huge level of support. So unless something really ugly happens, we still expect to continue to see dip buyers materialize there. So the focus remains more to the upside than the downside as far as we're concerned. And, I think that's pretty much it in terms of what is interesting for us going into this week. As always, guys, have an awesome one. Thank you so much. Have a great rest of the Sunday, great rest of the weekend, wherever you may be. Thank you once again for all the support. Have an awesome one. Talk to you guys soon. And don't forget Wednesday, anniversary of 87 and the next presidential debate. Have an awesome one. Take care, guys. Bye-bye.